Thursday, November 7th, quick one-up video for you wonderful ladies and gentlemen. Fed Day. Why was it on a Thursday? Because of the election. So instead of Tuesday, Wednesday, it was Wednesday, Thursday. With regard to sentiment coming into this today, we were just about where we had been. 46% bulls, 47% bears, and 7% on the sideline. That's a very low sideline number. It has consistently been in the teens for the most part, except when people come off the sidelines, usually to go for the bear camp. As far as the CNN gauge, they are loving life over here with 60% greed. Prior day was 57, and a week ago we were at 46. So rate of change wise, that is pretty impressive. With regard to the interest rate situation, they are expecting to cut another quarter of a point in December. As far as Fed notes go, they did cut the rates by 25 basis points to 4.5 to 4.75%. It was a unanimous vote. They're now more data dependent, it sounded like, but the data seems like it's coming in better for the Fed. Did they not just see the revisions to the employment numbers? So they say the inflation and the employment outlook are balanced. Better employment language, they said eased. Better confidence in inflation reaching 2%, so they feel that inflation risk is coming in. Economic outlook is uncertain. That we'll address in a moment. Fed actually said we have a strong economy. I beg to differ. They were citing the Q3 GDP of 2.8%. When you factor in inflation, that's stall speed economy. That's no growth. It's less than 1% worth of growth. He said there's a solid labor market, inflation eased, QT continuing, and they may reduce it so that they can take more out. He's talked about that in prior meetings before, that the Fed would like to bring down its balance sheet, and in order to do so, they may do the QT slower. He said that the consumer spending is strong, and this was the thing that I thought was interesting, and this stuck out in my mind. Equipment and business investment has been picking up and is stronger. That has been awful in all of the last Fed pressers and meetings. That is something to pay attention to. He's talking about a less tight labor market, so I guess he thinks wage inflation isn't going to be as much of an issue, and that is, of course, the big concern. As far as the VIX goes, we had talked about this likely coming down into the 14s, 15s, and it is doing so. I think you could generally now use the Fed day range as the gauge. So anything inside of Thursday's range is neutral, anything above it is bullish, anything below it is bearish. But I do like taking the opportunity with the VIX down here in the 14s and 15s to put on some put protection for end of year rally. We didn't like that in the 23s, that's when we talked about selling premium, and now I think we have to be net buyers. With regard to the ES and the NQ, we got up to the 6,000, we had been talking about this, and I had said I thought SPY was going to make it up to the 600. I'll be curious to see if this can hold. I have a feeling we're not going to just have a runaway situation here with 6,000. If there is a pullback, we could repair the rich close from yesterday down to 59.26, but I think shorter term there could be some support at 59.64 half. With regard to the Qs, we got up to right where I was looking for, the 7-11 high up at 21,237.75. And we just initially hit it, pulled back, and now we are a little bit above it. I don't necessarily know if we're going to continue up too much further this quickly, but I would use a gap up on Friday to lock in some gains and raise stops. You could use the opening 5 or 15-minute low as a stop or a short entry, and then you could use high of day as a stop if it does trigger to the short side. With regard to SPY, still looking okay. We're actually above the wedge high here. We had a little bit of a look below and fail of range on 11.4, which I said likely would get back up to the 1031 high. And the 1031 candle, I had said, could have the potential for being a professional gap. That is now negated. So what usually happens once you break out of range, and the gap yesterday on the election did, and it did it in dramatic fashion, it probably caught a lot of people short. And I think that's actually the reason for a lot of the rally. If you looked at the breadth yesterday and today, it was 1.3 to 1 positive to 2.09 to 1 positive. Similar situation yesterday. This isn't exactly people piling into stocks here. I think it's people covering short bets, particularly in the major market indices and, of course, the futures, because that's how most professional traders hedge. This is confirmed to me with the AD line and sort of the more middling ticks, although it did get a little bit interesting today post-Fed decision. I think the bulls really do need to see that more mass participation. And it seems to me like today was big cap tech day for the most part. That seemed to have been lifting the indices, and I have to tell you, that becomes a bit of a self-fulfilling prophecy because the Qs are heavily weighted in the Mag 7 names, and when the Qs go, it pulls the Mag 7 up, and vice versa. If the Mag 7 go up, it pulls the Qs up. With regard to SPY, we should be seeing 600. If we double up the range from the 1017 high down to the 11.4 low, it's 604.35, and the 2.618 is 615.62. I think pullbacks now to 586.12 are okay, but I wouldn't allow myself to get sucked into a 10-point decline here. Raise stops to low of day at 593. Anything below there is a right or right out short, and you could use today's close at 595.61 as a stop. Qs are finally ripping too. I think that looks like it wants to do a 2 times range move up to 525.30, and if it does the 2.618, 540.10. Similar setup here. If it loses low of day at 508.34, it gets more bearish. Anything inside the range is neutral. Above is definitely bullish. If you don't want to use the entire day's range and you're on a short hair trigger here, you could use the 512-ish area as a stop. That's just below VWAP at 512.20. Apple had been lagging the last couple of days. I think oddly enough, it got some mojo from Qualcomm, which didn't get much mojo even with their good numbers. And I do like that this is starting to participate. It's very hard for the market to really get going without its big generals. Although Nvidia seems to be the new Apple, right? I'm looking at the 20 MA as some potential resistance up at 229.92. And if it were to do the full move up to the downtrend line, that would be 230.72, assuming it did it tomorrow. I think short term here, if you haven't booked some profits from buying it down at the 220 area that we had talked about, it's probably a good spot to sell some here at the 10 MA at 226.31. Speaking of Nvidia, it's being added to the Dow, and that closed pretty much on the highs. There are 2 channels here. There's a yellow channel within a green channel. So if we were to pump up to the yellow channel high, it's at this point 151.32, and if we were to do it tomorrow to the green channel high, it's 155.54. So if you want to sell some calls against long positions, those are some short-term strikes you might want to use to generate some excess returns and then just be called out of the position. I think you could use the low of day 146.17 as a stop. I like the close here. It basically closed almost on the dead highs. Again, usually these candles with moves like this, we now have 2 big up days. We should have a third day because usually moves end in odd numbers. So it would be 3, 5, or 7. Gold has been a really popular trade. It had a big gap down yesterday. We had talked about the 20 MA likely being some resistance. It may have a little more room up to 250.101. If you bought the dip and you're going to stay with it, use low of day at 248.12 as a stop. As far as Bitcoin goes, this is a Trump trade. It had a really big move up. It does have a potential secure high here. If it were to lose 75,070, probably a good stop. I don't think it really gets itself into too much trouble though, unless it loses 74,415, but I'm sticking with the 75,070 because it's a 3-candle potential secure high. If we were to clear 77,535, the 2 times range is 81,450, and the 2.618 is 90,297. TLT, there's a lot of opinions on this. I had said I thought that this was a buy the dip in the 89s to 88s. If it keeps rallying, I think the 20 MA could be some resistance at 92.64 because now we technically do have a look below and fail, so we should rally into the high to mid 92s. Also, if you want to use low of day at 90.65 as a stop, I'm good with that. We had talked about longer dated call spreads if you wanted to do 90-100 or 95-105, and if it stagnated, you could roll the 105s down to the 100s. If you want to go out several months or even do some leaps playing for maybe 2026, I'd be good with that as well. Googliness had a pretty interesting buy I had talked about 3 sessions ago when it got itself down and was holding the 169s, and I had said it would likely pump back up to the 180s, and here we are, 181s. It could go a little bit higher. It may actually go much higher, maybe even to the 191s, which would be the 2 times range from inverted head and shoulders. I think that for me, it was just a trade. I had been short a put spread and long a call spread. I love when these trades work immediately. 2 days to sit in a thing like that was just a thing of beauty. Tesla is also a bit of a Trump trade because I think Elon Musk was a big winner here because he's now not going to have a security clearance question. He's now not going to have contracts canceled. And if anything, if the EV subsidy is removed, it may hurt Tesla short term, but it will likely destroy the other EV companies because none of them are profitable like Tesla is. They are a big beneficiary, and I don't really see President Trump allowing Chinese EVs coming into the country that BYD is never going to get over here. I think that if there is a full extension higher, we could see 320, but I do like booking it up here, at least some of it, near the 300 area. That has been a key problematic level for a while. If we were to lose 285.52, you could use the 296.91 close as a stop for a move down to 271-ish, which had been some prior resistance, which now should be support. Netflix, I've been a bulldog on that one. I told you I thought it was going to see 8 We got really close today at 798.22. This one actually has one of the best charts of all of the big mega cap names. We talked about the bull flag, we talked about the move over 773, and here we are. We are now up to the yellow channel high, which we'll discuss in the weekend video late night tomorrow. But I do think it's a good area to trim into. We don't stand on ceremony here, but that 800-ish area, if you want to sell some at the money calls here and use that to get out of some positions going into Friday because we are near channel high, good with that as well. The financials are getting a lot of love here because the M&A action will likely pick up with the Trump presidency, but yesterday we topped out at channel high and we are seeing the pullback. I think if it pulls back to 47.81, we could probably sell some 45 or 46 out of the money puts, preferably with IV being a little bit higher, but it may just consolidate up here. Obviously, the big beneficiaries of these are going to be the investment banks. JPM might get some, although that looked like it gave back quite a bit today. Goldman Sachs, I think, is a beneficiary, although that hit the 2 times range, which we talked about selling at 597.15. I think if you use low of day now, 581.52, it's right there, so it could be a quick stop if you didn't book some gains. Morgan Stanley, same situation. This stalled just shy of the 2.618 at 134.16. It got 133.52. This is why we don't stand on ceremony. If it were to lose yesterday's low, because we're pretty close to it, at 127.66, we could have a multi-day pullback in the one time framing spirit and maybe get down to the 121.45. I don't know for sure it would get there, but that was a prior resistance and now could likely be some support. It'll likely line up also with the 20 MA by the time it gets there, which is currently 118.46 and rising. I do think Morgan Stanley is better run than Goldman Sachs at this point. That was never the case years ago, but it has been for the most recent, I'd say, 5 to 8 years. Microsoft has been pretty strong too, but had fallen down on earnings. We have now come up to the bottom of the gap-ish area. I think that it's a good spot to book some gains into 426.97 to 430.82. And if it were to get to 436.73, probably a good spot to take it all off. I think you could use 419.88 as a stop now. I didn't mention Meta in the midweek video, so let's do that now. Very strong. We've been bullish on this. If the dollar keeps rising, though, that could be problematic. Usually, Meta is strong in election years. Next year is an off cycle, so it may be a little weaker, and then it'll beef up for the midterms. 600-ish area looks to me like there's going to be some resistance there because that does remain channel high. Though I'm good with this as long as it stays over 577.68, which is the 20 MA. Generally speaking here, we have a very favorable election result that clearly was not fully priced into the market. If you looked at the betting odds, people were almost 50-50 for a while, and at the end it was more like 60-40. That means 40% of the people there may have been caught off sides with protection or even short. I think that you're seeing a little bit here of a short squeeze given the weak breadth. That doesn't necessarily mean that it can't grind higher, and it doesn't necessarily mean there can't be some kind of capitulation with very intense breadth that just is like get me in type of moves. We're really close to the end of the year and a lot of these stocks are up big. There may be some delayed selling into the new year as opposed to this year. Corporate tax rate seems to be coming down. I would imagine energy prices are going to come down probably instantly on the Trump administration, because I believe on day one he is going to put in some energy reform. Shorter term, the Biden administration had been emptying the SPR ahead of the election. That is not happening now, and I do think that we could see oil higher before lower. Like and follow for more.